All right. Well, Kenny Gatliff, thanks for joining. How you doing today?
Doing well. Good to be back with you, Dan.
Yeah, appreciate you hopping on. So, for those that have not listened before, I'm Dan Pallison, wealth manager, financial psychologist. I'm here with Kenny Gatliff, who's an investment manager and a chartered financial analyst. And so, we like to chat for less than 10 minutes just about something that's going on in the markets or otherwise. So, Kenny, here's what I'd like to discuss today. We're recording here late August.
Okay.
There's a day that stands out to me. It was about the first Monday of this month in August, and it's like I'm gonna draw a bad parallel to like one of those days that really stands out, right? Like we all remember where we were on 9/11. Like it's just one of those days that's kind of burned into your brain. I am in no way saying that August 5th was anything like a September 11th. But the point being is like that day just kind of stands out. Like the markets were dropping, got a few calls and emails from clients, which is understandable. But can you talk a little bit about like what happened around August 5th this month?
Yeah. So, I mean, as you alluded to, we saw the market dropping pretty precipitously for a few days in a row. And anytime we see, the market string together some bad days, it always leads people to, be on edge a little bit, be a little bit concerned about where the economy's heading, where the market is heading. And I think if I remember correctly, that was the day where we kind of bottomed out based on where we had been. And I think if you look at Nasdaq and a couple other asset classes, we were in correction territory. It was down 10% off its highs. It was looking like everyone always tries to presume what it means or why, but there was some indication that the Fed had messed up and we were going to be in stagflation territory, where we're saying, okay, we got the inflation, but we're not getting the growth anymore. It looked like, things might be stagnating a bit. Um, and, in hindsight, now we're a few weeks past, that blew over pretty quickly. But at the time, once we start seeing 10% drops, again, it's always a little bit of a scary time as an investor.
Yeah. Yeah, and you had talking about a 10% drop also throughout the term correction. So by definition, right, a market correction is a 10% drop from its high. So that's how we
Mhm.
define what a correction is. Kenny, we've talked about this many times before, but can you let us know like how often we can expect to see market corrections? Like how often do we see markets drop 10% or more?
Yeah, and I think this is one of the stats that usually blows people away is how commonplace it is to see a 10% drop. And I was just looking at an article just recently, probably based on the fact that we are approaching this, and it shows a really neat graph of intra-year decline. So what was the biggest drop the market saw during the year, and then what did the year end up finishing? Did
Okay.
it finish up? Did it finish down? How much either direction did it finish? And what it showed was about 63% of all years do suffer a 10% decline at some point during the year. So about 2 out of every 3 years, you are going to anticipate seeing a 10% drop at some time. But then
So
when you,
so
yeah, go ahead.
so 2 out of every 3 years we have a correction. There's a 10% drop.
Yes. Yeah.
So I'm assuming that means 2 out of every 3 years are negative in the market.
Yeah.
Just
And that's where you
that's a
would think it's like,
softball, but
okay, well, if we have that, that's a really scary stat in by itself. But when we actually look at the history of the stock market, usually it's kind of the reverse of that. About 2 out of every 3 years, depending on kind of what start dates you're looking. What one stat that people point to is like, okay, since 1980, it's a nice round number, and since 1980, 33 of the last 44 years have been up. So that would put you at 75% of all years finish up. So it is this kind of misnomer that like, oh, once the market starts heading down, there's some momentum there. We think it's going to continue. Well, that's not what history shows us. Most of the years where we see a 10% drop, we actually see that recovered, to the degree that we're not only not losing money, but we're making money on the year in the stock market. So it is one of those, you have to train your brain to, you know, anticipate something that wouldn't normally be expected.
yeah, yeah. Yeah, so and I like this. It's even for me that's familiar with some of these stats. It's always good to talk through it and wrap my mind around it. So just tell me if this is correct, Kenny. About 2 out of every 3 years we can expect at least a 10% drop in the market at some point in the
Mhm.
year. But even still, 3 out of every 4 years in the markets are positive.
Yeah, yeah. I mean, I think that's fair to say. And
Yeah.
when we look at that, the hard part for most investors is, we talk about investing as this long term pursuit. If you have equities, you want to be invested for 5, 10 plus years, but we really think in days and weeks. And if we have a month or 2 months or 6 months that's down, so if I open my account on January 1st and I've got $1 million, and then 6 months later I've got 900,000, that feels like a really long, drawn out downturn, bad scenario. Now, if the market recovers in the end of the year, I'm at 1.1 million. Well, yeah, in the long run, I'm not going to know that. That stat is going to be meaningless. But man, those 6 months felt long. It felt hard, even though that is just kind of a run of the mill period of time in the stock market.
Yeah, I mean that's oh man, you're getting into my realm now as like a financial psychologist where we're just not wired in ways to have our timelines truly match up with like a good investment timeline. Like
Mhm.
a year, 365 days feels like a long time to us looking forward. Now looking backwards, years have gone by and we feel like we blinked. But looking forward, like 365 days feels like a long time. But in the financial world or the world of the markets, that's a pretty short time horizon. And so when we're investing, we're really looking at, over someone's lifetime, which when I go back to like the stats you're bringing out, we can expect these, again, 2 out of every 3 years, we're going to have a correction in the market, yet 3 out of every 4 years are positive. So my takeaway is, just kind of have the plan built, understand that it's not if the market will drop, but when, and just be
Mhm.
prepared to weather the storm kind of over and over again. So I'm kind of a numbers guy, Kenny. I know you're definitely a numbers guy, so I take some solace, or I have some peace of mind when I know what the averages are and what the numbers work out to. But yet, it's still hard in the moment to kind of stay the course when it feels like the sky is falling.
For sure. And we're definitely in an environment now where if there is a 10% drop or even a 5% drop, there's always going to be some plausible reason why it's dropped and why it could continue to drop. And those are, the articles that get clicks, right? So those are the ones on the front page of Yahoo Finances. This is just the start, or some, talking
Mhm.
heads on CNBC talking about, we've been seeing this coming and now the floodgates are open. You constantly hear that. And so, when there's a plausible argument for it, and when you hear so-called experts telling you that this news is negative, well, then it can feel even worse than what the data shows. So I think that's why it is fun, important to have these conversations. Say like, you know, there's always going to be a reason why the market dropped 10%, but it's going to do it so often, and it will bounce back in the future. And so don't get caught up in that, the short term, or what the reason is, or what the most negative possible scenario could occur. you know Focus on the long term. We're going to have a lot of these scenarios. We're going to get through them, and just play the numbers.
Yeah, yeah. Well, Kenny, we're over 8 minutes, so we're going to give people a little bit of time back if they committed to 10. So I appreciate you being here. We're recording on a Friday, so Kenny, happy Friday. Have a great weekend, and we'll talk soon.
All right, sounds good. Thanks, Dan.